Again, the big change from the current rules in the private sector, the big change, apart from having to carry out the assessment, is that there will be circumstances under which you will be liable if a PSC contractor is paid in a way that doesn't comply with IR35 and doesn't comply with an assessment of their IR35 status. So the first way you could be liable is if a contractor is paid outside IR35, i.e. they're paid gross, and you have just failed to issue any assessment at all. You just haven't done an assessment. If you've not done an assessment and the revenue challenged that payment to that PSC, you as the end user will be liable for that. So you have to do these assessments. You can't get out of them. You'll also be liable if you do the assessment but you've failed to notify the staffing company and the contractor. So you've got to get, it's in your, you are liable for that tax until you've issued those notices. So you've got to get those notices out as soon as possible. And under the public sector rules, you actually have to issue that information before the assignment starts. That's going to change. They've completely changed this legislation. It's going to change in the public sector as well. They're basically saying, look, until there's no time limit on this, but until you've issued it, you're liable. So it's obviously in your best interest to get it out there as soon as possible. But I think the reality is that certainly in the early days, it may not be possible to get all assessments done before an assignment starts. I think at the very latest, it needs to be issued before that contractor is first paid, because you need to make sure that their payment status is clear before the first payment run. Otherwise, that gets pretty messy. You can also be liable, again, we're getting a little bit sort of esoteric here, but if you haven't exercised reasonable care in carrying out the assessment and your assessment is that contractor is outside IR35. So you basically say, look, we're not really going to do an assessment, but we think that they should be paid gross of tax. We want them to be paid gross of tax. We don't really care what the IR35 status is. You can be liable for that as well. What you won't be liable for, so provided you've carried out the assessment, you've issued it, you've exercised reasonable care, you won't be liable if at some later stage the revenue challenges that status assessment and it turns out to be wrong. You will only be liable if you've been negligent in the whole process. So this is actually, I suppose it's absolutely key, but it's a bit of a poison pill for whoever is paying the PSC, which I'll move on to now, because who has the responsibility for deducting PAYE, paying national employers' national insurance, and deducting employees' NICs? And I'm going to draw a diagram now, I think, because this would make sense. So that's called SDS, that's Status Declaration Statement, I think it stands for. Okay, then you've got, again, I'm going to put TXM here, PSC, contractor. So you've got to issue the results of the SDS to TXM and to the contractor. Okay, where's my draw? So this is notify. Okay, so if this is outside IR35, so the assessment is outside, okay, you've given that information to the contractor and to TXM, things carry on as they always have done. The PSC invoices TXM, TXM invoices you, and the whole thing is a gross of tax arrangement. So let's just put outside here. Gross tax and NI. And then obviously the contractor themselves deal with their IR35 and corporate tax position and their personal tax position via self-assessment. It's for them to deal with, okay? That's where we've got an outside assessment, okay? I'm running out of colours here. I might have to go, shall we see what the rainbow one's like? So, if we've got inside, ooh. This is like magic roundabout. So the same thing happens. You still have to notify TXM and the contractor of their status. But then the question is, well, you know, how does this person get paid? Who is responsible for deducting the PAYE and national insurance? And in this scenario, let's just imagine nothing changes here. It is actually TXM who is paying the PSC. Within the context of this new IR35, TXM becomes what they call the fee payer. I'm going to have to change his pen, I think. Okay? And it is the fee payer who is liable for any tax that isn't paid in accordance with that inside IR35 assessment. They are like the front line, if you like, for liability purposes. So as I say, provided you've done everything you need to do as an end user, it will be TXM who is liable for that. The only reason that might not be the case is if somebody other than TXM pays the contractors. So that's where the umbrella companies come in. Let me just see. What's that one? So let's just say there is an umbrella company. Can you see that? Yeah. Okay. So that TXM would then contract with the umbrella company. Now, it's a slightly confusing thing for me to say because I've obviously said umbrella company contractors are not included in this, but there are some services out there who are offering IR35 assessment and fee payer services. So they will act as an intermediary to pay the PSC, who then obviously pays the contractor. Again, I haven't really got time to go into too much detail about these. These create a slight layer of complication in the whole equation. I'm not going to say all of them are going to cause a sort of legal risk, but they would need to be approached with caution because there are other tax rules that could become relevant there that would need to be taken into account. So in terms of making sure that you know who your fee payer is as an end user, the easiest way to do that is to have as short a supply chain as possible. And sometimes you'll have transparency as to who's actually paying the PSC contractors, and sometimes you won't. But that becomes quite an important part of all of this because you need to make sure that whoever is the fee payer in your staffing supply chain, that they are people you've carried out due diligence on, they are financially stable, they are able to provide a service that is not going to suddenly disappear overnight. And that is a real risk in staffing supply chains. And Revenue did recommend that anybody who is using a fee payer to pay PSC contractors should carry out those checks, should carry out due diligence to make sure they know exactly who they're dealing with. Again, we can pick that up in the workshop this afternoon because that can create another layer of complication for you. So let's go here. So you've got this situation where you're going to have inside or outside I-35. I suppose the the question is, well, what would be the solution to that? I mean, you're going to have a number of contractors who are going to find this very difficult to take on board. Do they carry on working through their personal service company, or do they switch to something completely different, like an umbrella arrangement that wouldn't then need to be assessed under IR35? Or do they go down a different route? There are various different options out there. The one that comes up again and again is what they call statement of work. I think, again, that's something that we'd need to go into detail about, but basically that is a deliverables-based arrangement of working. It's very different to staffing, where you've got an individual who comes to work for you and basically does what you need them to do. A statement of work is where they agree to do a certain thing and they agree to deliver a certain thing to you. So that could be a project, it could be a service, but they're actually getting paid to deliver something. They're not getting paid for the time that they work with you. So it's not just a change in label. It's not just a tweak in a contract. It's actually a different business model. It's a different way of doing things. And there certainly is scope to do that within the context of trying to work out whether IR35 applies or not. But it needs to be done quite carefully. I know TXM have got a few sort of project arrangements that would lend themselves to that. But generally speaking, it's not something you can apply across the board. So I'm not saying don't do statement of work, but you need to approach it with caution. And if you do it with your contractors and your agencies, it does require, I suppose, discussion and buy-in from both you as a client and them as a supplier or a contractor. Again, we can look at this in a bit more detail in one of the workshops if anybody has got questions around statement of work. But it's not a quick fix, I think, is the message. Now, in terms of what TXM can supply, which is partly due to the fact that they've been through this with the public sector changes and they already do this in their healthcare business, is that they can offer an arrangement whereby they actually pay the personal service company on what we call a deemed payment basis. And so, again, this is you. Hang on. And TXM. So this is where we've got people who are inside IR35. And again, we had a few figures from the survey about who thought their status would change. The answer to that question is completely up in the air at the moment. You know, we've seen all sorts of predictions across the board, but I think you can probably gauge from the employment status test that I mentioned earlier on that there will be a significant proportion of PSCs that you currently use whose status will be inside IR35. Unless something significant changes in the way that they do the work and they contract with you and they take on financial risk, or they completely redesign the way they do things on a statement of work basis, there is going to be a significant proportion who will be assessed as inside IR35. So I think this is a reality that everybody's going to have to come to terms with, that there are going to have to be contractors who accept this. They move from a gross of tax basis of payment onto full PAYE and national insurance, and all of the costs that go with that, and I'll come to that in a minute. Some of those personal service company contractors will want to retain their personal service company because for them, they want to be independent. That's the way they do things. Others will be prepared to go down an alternative route, either as an agency worker or as an umbrella company contractor. But what TXM can do is actually payroll personal service companies on an inside IR35 basis. So we've got PSC here. So inside. And the advantage of that, I mean, there are a number of advantages. Again, and this is something we came to when we had our sort of 7-hour session. It's not straightforward to payroll a personal service company. It's not impossible, but as I say, they've got experience of doing this. A lot of agencies will probably shy away from this because they just don't have the capability to do this, so they will use a third party to pay, even outside IR35 contractors. TXM can actually pay them on an inside deemed employment basis as deemed payment. Okay, so that means that before they pay the PSC, the PSC effectively goes on to TXM's RTI. They pay employers' national insurance, which is a headline rate of 13.8%. Obviously, the actual calculation will be slightly less than that, but that's, you've got your employer's NICs. Okay. Then they also deduct PAYE as if the contractor were employed. And they'll also deduct employees' NI. And then that just goes to the revenue on a monthly basis under RTI. So there's a very short supply chain there. You're paying TXM, TXM's paying the PSC. You're not having to get worried about anyone else who might be involved in paying the contractors. You know exactly what they're doing. You've got that full transparency. You can audit them. You can check that they are making those payments to the revenue on a regular basis. This is not going to bounce back up to you as an end user. Okay? So I think that's useful to be aware of. As I say, the alternative is that TXM deals with a third party, and obviously they would vet anybody they're dealing with, but ultimately you've got a big question mark. You start to lose control at that point because you don't know what's going on between the third party and the PSC. So that's something that TXM can offer. And then obviously there's also the PAYE agency alternative. Now, the difference between the deemed payment arrangement, where they're actually paying a PSC, and treating that person as a PAYE agency worker, is that as an agency worker, you do then get worker rights. You don't get full employment rights, you get worker rights, so you do get a right to holiday pay. You do have a right to be auto-enrolled in a pension. They are counted for the purposes of the apprenticeship levy. In fact, so the PSCs as well, but I'm not going to dwell on that too much. But this basically is holiday pay, pension. Where you've got a third party paying, again, it depends on whether they're paying them on a gross of tax basis or not. Where you've got an umbrella, so this would be outside, so inside, it's actually the umbrella company that would be dealing with all of the employment costs. So once somebody's gone to an umbrella company anyway, they're outside the scope of IR35. You don't need to worry about them again for the next assignment. This is just where somebody's shifted from having been a PSC into umbrella, then they do become an employee for, it should be for tax purposes, but also for employment law purposes, because the umbrella company does actually employ them, or most of them do anyway. So then they get the full range of employment rights. They have to pay the umbrella company for that. So again, there's a difference there between working with TXM on a PSC basis and converting to an umbrella. If they convert to an umbrella, the contractor's going to have to pay the umbrella for the privilege of being employed and paid by them. So again, that's something for contractors to be aware of and to work into the mix. Does the deemed payment make sense to everyone? Has that cleared up a few uncertainties around that? Yes. Yeah. So if they did want to go and work on a different assignment, let's say, they would still have their limited company intact. I mean, it may be that some people start off that way and they eventually go over to umbrella or some other form of PAYE. But it's certainly a decent option, particularly in the early days when people are not quite sure what they want to do. They're not accepting potentially the inevitability of being inside. It does provide a useful bridge, if you like, until someone's decided that they're never going to be outside IR35. But who knows? It depends on what they're doing, what they're working on, and who they're doing it with.